Everybody, it is me today with What's Good with Jonathan Schlossberg. We are bringing on an amazing guest, friend of mine. This guy, we've been chatting for a little bit, is awesome. You are going to be meeting Ian Hogan. Ian Hogan is a partner and dad at Ethical Scaling, where they help online businesses and agencies increase retention and the lifetime value using the raving fan formula. He's going to talk about that. We're going to talk about more. He heads up the team optimizer phase to help team members show up as leaders and guide clients through the optimal client journey. And he also manages the business treasury. We're going to dive deep into this and helps other owners utilize resources that they currently have that are collecting dust. Especially today, being tax day in 2022, this is going to be very key because nobody, for the most part, likes today, but I'm sure Ian is going to tell you why he loves it. He previously owned, operated, and sold a clinic and gym for about a decade, helping families and athletes with weight loss, performance, recovery, and chronic injuries. And he is a real dad. Loves spending time with his wife and family and his two little boys. We were just chatting how they spent Easter together. And he tells terrible jokes. We might have to compete on that. And is below average at peopling in large groups. So buckle up. I had the fortune to meet him at an event I know his partner, and they sat next to me, but we rarely talked because he doesn't people. But without further ado, I'd love to introduce you to Ian Hogan. Ian, welcome. Thank you for joining me. Say hello to your fans.
Hey everyone, thanks for having me. This will be fun. We get to people from a distance.
Yes. And I'm excited to chat. We've been chatting before this about the things, and we know some stuff that other people don't really know. But we're gonna dive into it because you are well versed in a lot of areas. Your partner Ben McClellan, basically the king of Facebook trolling,
Yep, it's a bit.
have been working together a while. So why don't you just give me? I know I gave an introduction, but why don't you tell people a little bit about like you, who you are, what you really are focused on right now.
Yeah. So I'm Ian. Everyone calls me Dad because, like I said, terrible jokes and fathering and all that jazz. But we help businesses with their client retention, lifetime value of their clients. I actually got into that after selling a brick and mortar business. So I didn't actually learn sales and marketing until probably like 2018 or something like 2017, 2018. We started our business around 2010. So it was really just learning how to get referrals, learning how to serve people really well. And I got in the online space and was like, whoa, this is very different. Just the way that people show up and the way people market and sell. And I found it really fascinating because I'd talked to a lot of people who were really great at sales and marketing, but they struggled massively with keeping clients long term. And they really struggled with delivery a lot as they scaled their business and grew it. So I got to reconnect with Ben and Jay and the wonderful Jay, of course, as well. And he had started Empowered CEO, and we connected on ethical scaling to help businesses with their retention. And Jay actually spearheads the raving fan formula. He's a genius at it, putting clients through customer journey, profit maximizer, all that fun stuff. And I think for me, it's just been really fun to watch that epiphany when you can see business owners realize, hey, I'm not going to rely on having to get in like 30 new clients this month or else my business fails. Like they start to get recurring revenue, they start to feel really much more comfortable. And we work with a lot of businesses who are doing fairly well. They're usually like 7, 8 figures a year in revenue. So they usually have marketing and sales pretty dialed in. It's just a sense of like the churn rate's really high or they struggle with upgrades or things like that. So we've been helping a lot with that. It's a lot of fun. And that kind of led into a lot of the leadership coaching and team optimizer for me. So I really enjoy working with owners and teams to help them show up and kind of align their business with their personal goals. So obviously you got in the treasury stuff, things like that as well, because um, middle of last year, I took over the treasury and just started investing more of our reserves into things. And what happened there was uh, we ended up starting making equal to or more in our investment returns than
I'm
in our
sorry, say that
revenue.
again though.
We ended up making equal or more in our investment returns, which required me pushing a button on the internet and then walking away instead of having to take more calls, having to set more clients, do all those wonderful things we have to do in business. And that for us just created a really, really cool extra layer of security for the business. So we could really show up authentically, and we're not really worried as much about, oh, what happens if we don't renew this client, or what happens if this thing happens. It's just not on our minds as much. And then we can show up and really help people and coach them, and we're good either way. But it makes it super fun because it's that old adage, right? The guidance counselor question. Hey, if you had $1 million, what would you do with your life? It's like, well, now we get to actually figure that out. It's fun.
It's so cool that you say that because I feel like, first of all, you said a lot of words that I think most people don't consider. Reserves, right?
Yep.
Showing up authentically for your clients. I love that. And it's not so much you, but I think it goes across when Ben is showing up, he's literally like, I don't want clients.
Yeah.
We may
Yeah.
take on one client this month. And it's not like a ploy where he's like,
Oh,
I'm doing FOMO. It's literally like, I don't need it. We're totally safe. We get to show up and help the clients that we want to in the way we want. And you don't see that very often.
yeah.
I feel like our company, Sasha and I, do that same thing in the sense of we're authentically like, we'll work with the right people, we'll say no, but it's not necessarily at the point where it's like, hey, our business reserves are functioning to supersede or equal or sort of like help the business grow. Um, let's talk about that. Like, let's dive into, and we don't have to get into that specific stuff yet, but like, I guess where would you like to go best? Like, I can direct this. Do we want to talk about like the raving fan? Because I forgot we were going to talk about the raving fan, and that's so powerful and it's so amazing because like literally it's like going into your cupboard and going, I don't have any food, and then you look in your cupboard and you're like, no, you have tons of food.
Yep.
So let's dive into that a little bit about how you do that and how you mine gold from your current clients in a way that feels good, the way that is ethical, and not constantly having to sell a program, sell a client, all of that.
Yep. It's a lot of businesses have tons of resources that are existing, right? We know this as coaching so many businesses. It's like you go in, and oftentimes one of the first couple questions we ask a client is like, what's your churn rate, or what are what percentage of your clients get tangible results that you can measure? And that's a big one too. And most of the time, you get a pretty vague answer, right? It's similar to when you ask people what their investment, their retirement number is. It's always like a really even number that's just kind of like, oh, it's 5 million, or it's 3 million, or when we ask what their client results are, they're always like, well, it's like 50 or 80%. It's never, you can tell there's not necessarily a tangible thing that they're measuring. So right away, what tends to happen is we assess the current client journey. Jay does an amazing job with this, so it's like a full audit of what they're doing, and then we go in there step by step, and we always start there. Usually with most clients, our first date offer is like client journey, because we just want to make sure, like, what are the touch points in your offer? Are you actually are you meeting one to one? Are you meeting in groups? Is it more messaging? Is it phone? Is it calls? Is it how are you guiding them? Do they know where they are in the journey at all times, or are they confused? Is it like, where are people dropping off? And most of the time, when you start to get all this information, you see patterns, and they're usually fairly obvious to us because we've just seen it so much. But I think what's so hard is it's that analogy of like being inside the bottle when you're the business owner. You have so many hats you're wearing. You're trying so hard to just make it work, and you're stressed out. And we often say our ideal client usually says, I kind of lose sleep at night because I want my clients to get really good results. And that's the clients we love.
That's literally, and I'll speak for Sasha because she works more. I mean, we all both do, but more directly with the clients, and she's literally like, Saturdays and Sundays, like just Voxering because she cares and wants them to have results and feels personally attached to it, which I think you would agree we have to be semi detached. It's not fully our responsibility. Um, but I love that you said that. Where for you all does the client journey start? Is it once they've given you money? Is it prior to? Like, tell me about that.
That's a great question. It's a big classic. It depends. Haha. Um, I call it the adult diaper answer, but it's like I think for some of the businesses, most of the ones when we start, it's usually after the sale. So it's the transfer of trust, right? Making sure that that's clear. So if there's either a coach or an account manager, or if it's like an agency or whoever is taking on the client, making sure that transfer of trust is really solid between the salesperson. Sometimes it's the same person guiding them through, so that's fairly simple. Um, we'll dig in sometimes. We don't really like go crazy into people's marketing and sales because, like I said, most of the clients we work with have that dialed in. We only do that if we're seeing a lack of congruency. So if there's like an obvious issue that's happening after the sale or the client expectation, then we might say, let's go look and make sure there's nothing in your message like guaranteeing this thing or saying this thing that you're not delivering on. So oftentimes with bigger teams, you see sales and marketing fulfillment very separated
Yeah,
and they don't communicate super well. So if it's a team like that, we might do that, but usually our beginning point for most clients is going to be, yeah, after the sale. So pretty much right away, like, how are you welcoming people into your program? Um, how are you dealing with that? We just talked about this today. How do you deal with the inevitable buyer's remorse if you have a certain kind of sales cycle? So certain businesses with a short sales cycle, they might have massively high buyer's remorse because the salesperson was phenomenal, but very like emotionally driven with the client. So now there's going to be a huge valley. So how do we make sure we can normalize and talk about that before it becomes a problem? So a lot of it is preventative work. If I'm being honest, that's most of what we're doing with clients. It's putting things in place so that the clients don't hit these massive valleys in their client journey.
that's awesome. I'm just sitting here thinking about that. What would you say the percentage of clients that you work with or people that you see out there have this issue? Do you think like
Ridiculously high. Um, so so the issue just becomes most business owners, especially I'd say sitting around zero to even a couple million a year, even some of the eight-figure businesses, they don't actually have really consistent um, measuring or metrics on this stuff a lot of times. They might have a general churn number, but if you have like eight offers, you have to really look at each one and in each journey and everything else. So what tends to happen as businesses grow is things get complicated because they're running all these different offers, all these different pipelines, all these different things. And most of the work in the beginning is just organizing and figuring out like what's actually happening in your business consistently. And I've done this because it's like I get it, shiny object. Most of us are visionaries. Um, every couple months, you're like, oh, I want to do this new thing or try this new thing. But the issue becomes, well, what is that taking away from, or what's the opportunity cost there, or what is the other thing I'm doing working as efficiently as possible? And if that's the case, then sure, you can play with the upside. But I think it's a lot of like we've yet to see a business we've audited that obviously because they came to us with a problem. So that's a little harder to determine how
right?
many don't have the problem. But it's like for us, most of the businesses are coming in because they either know that there's churn has gone up significantly and they obviously have felt it, or they think, as we're scaling and growing and we're getting more volume, it's more challenging to connect, it's more challenging to get results because we just have a bigger pool of people. And I say this all the time, it's like 2% of you know 100 people is a certain volume to you. 2% of 10,000 people is a higher volume to you, even though it's still 2%. So it's just remembering, we don't scale emotionally sometimes with these things so quickly. It's really hard. If you feel like it's a lot of people that are struggling and you're a caregiver type, it's really challenging.
Oh man. Um, and it's like I feel like everybody struggles with it because nobody knows how to put this in place. They don't teach this. It's all about acquiring the client,
Yep.
serve, and some people care about serving the client. Some people are like, hey, I've gotten my money, and if they 80-20 rule, hey, if they get the results, great, fantastic. I'm here for them. And I feel like we're very similar in terms of how we resonate ethically with our clients and our desire to actually um, break the stereotypical coach vibe and sort of setup. So you go in, you do the audit, you start helping them put systems into place.
Yep.
What if somebody has like a program, but they don't have something after the client has gone through the journey? Do you help them come up with, say, like, hey, this
Yep.
is my offer, and they're like, hey, it's a churn because they don't know what to take them to next. Is that part of your process? Like,
Yep, that's profit multiplier. So that's the usually depending on, it's not one size fits all for all the clients. When we do the audit in the beginning, we kind of some things we run in parallel. So like Team Optimizer, because you're helping the team become better leaders and coaches, and the owner sometimes, depending on how big the team is, you're running that in parallel. And then if they don't have any back end at all, usually, and this is a pro tip to everybody, if you don't have a back end, what's the simplest way to have a back end? Just have a continuity thing. Just have like a monthly recurring, or like, hey, we'll keep supporting you in this way. And then you get feedback from your clients, and then you figure out how to structure that back end as you go because of the wants and needs that come up with your clientele. I think so many people try to structure this massive back end and they don't even know if it's what the clients are going to want next, right? It's similar to how when you have somebody put out an offer initially, it's like, go ask people what they want before you build this
oh my goodness, the
giant
number of
thing.
people, I'm going to
Yeah.
create a course or I'm going to launch this. Well, is there a market need for it? I don't
Anybody
know.
want it?
Well,
Yeah.
maybe you should go and find out because you're going to spend. I literally have this conversation. You're going to go create a course. You're going to take time, money, and energy to try to then have to
Yep.
sell it. And if you don't price it right, whoa. But then if it's like nobody really cares about it, you've now done all this. I think that's really genius. Can you actually give a specific example? Because I feel like a lot of people know what back end is and continuity, but can you give a specific example or something more concrete that people are like, okay, say I have a 6 month coaching program, right?
Yep.
And they pay X amount per month or pay in full, and I'm working with them, and there's a group/one-to-one component and all of that. But they're coming up on 6 months. What do I do?
Yep. That's a great question. So obviously, same thing, adult diapers. It depends on the owner. And I always look at it, and this is me personally, I ask a few questions around what they want to be doing long term, like the owner and the team, because I want to make sure they're not going to add some layer that they're going to hate delivering. That's just, to me, that's just kind of common sense. Like, don't, because you could be like, oh, here's a value ladder, and then we're going to do this. But if they hate delivering in that new way, it's not going to be super effective. So one of the simplest ways to do it is look at how you're delivering already and where you're already showing up, and how can you have them continue that, right? Because you're already there doing it. So one-to-one becomes a certain challenge of time and energy, obviously, but that's fine. If you really enjoy showing up one-to-one, you can then make the decision of, all right, do I want to charge something equivalent to my one-to-one time or more so I can make sure it's worth my time? But we have to consider this: they're a much easier client to serve because you have a relationship with them. They've already proven that they can follow instructions. They're probably, you're going to keep them around because it's probably been a great relationship and you really enjoy it. So for me, it's a no-brainer. But that being said, one of the simplest ways is you can just offer more of a trialability thing, because when there's continuation, I don't personally like to have a long commitment if I don't know if I'm going to keep doing it, because I want to be authentic with them. I want to be like, hey, let's go month to month and we'll see how it goes. Or it's usually 3 months for me is usually uh, a quarterly is really nice for people because you can get a good chunk of work done, but you're not committing to like 3 years.
So let's just throw out some randomness. Okay, so it's a 6 month program. It's 10K for or 15K for 6 months, and they're doing all this, and then they're kind of coming up. You could be like, hey, how about, because 15K 6 months, that's like a little over 2 grand a month, or even if it's 10, it's over a grand a month. You could be like, hey, we can help support you. What about continued Voxer access? We can go to month or do it quarterly, and rather than that, we can do it for like $750 a month. You're going to get access to me and my brain that way. Is that something that you're talking about?
Yeah. So what we implement with clients, I'll just straight up give this to you guys because why not?
Wait, are you
Yeah.
going to give secret nuggets?
Secret nuggets coming in strong. Jay's gonna murder me after this podcast. So we implement something called a strategic review, and it's super duper simple. And it's usually along, and we teach all the teams this, but it's usually, I'd say if you had, say, what did you say, 6 months, this would be probably, we'd do this a couple times. I like doing it at least quarterly, but we would do this definitely by month 5. So at some point in month 5, you're going to, and this is going to be preset. The client already knows, like, you're having this call for a strategic review. Call it whatever you want. That's just our name for it. Put your own fun spin on it. But what you're going to ask the client in whatever your own language is a version of, like, hey, what have been your biggest wins during our time together? What have you enjoyed most? What have been the biggest lessons you've learned during this time? So, and everybody has their language, right? And that is fairly simple. You're like, cool. What do you need? Oh, I'm sorry. You would ask them then, what are their goals for the next 3 months or next 6 months or whatever else? And then, cool. Would you like support with that? That's it. And
I
then
love
they're
that. And
pretty
then they're
much
like, well, what
telling
does that
you
look like? And you go,
exactly.
we're going to custom tailor it to you.
Exactly. And that's the cool part because it's the same thing. I'm not going to make an offer to somebody that I don't think is going to benefit from us moving forward, if because they might say my goals are this and I'm like, "Oh cool, you're on your way," or "Hey, this other person is actually really best suited to serve you in that or to give you that next thing." Or, "Oh, actually, yeah, we that's usually what happens." So, oftentimes the client is going to give you those clues of what they want next. And if you know that it's in your lane and you can deliver on that, you're like, cool. A lot of our clients notice this and this after they finish up this kind of work. That's why we have this available to you. And it's so much easier too, because think about it. They've already trusted you. They've already gotten great results, hopefully. And they're pretty much like, I don't want to lose connection. I'd like to keep this going because what most clients struggle with is sustaining. It's not, a lot of people can acquire stuff for a short period of time. It's sustaining. So if they need coaching or accountability or whatever that thing is, it's like it's the easiest sale without selling. You're just asking them what they want. And then what's so cool about it is you're like, cool, want to use your card on file? Awesome. Like, and it's like the easiest sale in the world because I don't view it as a sale. I view it just as an ask of, um, do you want support?
Yeah. No, I love that.
Yeah.
And I think what's interesting that you're saying here too, it's like when you find out if it matches, great. But if
Yes.
not, let me point you in the right direction because
Yes.
I don't necessarily have to do it because I need to get you. I need to get the money. You know what I mean?
Exactly.
And I think and the other thing I find it's so interesting now in this space, it's like everybody makes the list of all the coaches they want to work with. And they
Yep.
have like their wish list of like 5 or 10. And I think that's good to a certain degree. But I like to, when I talk to people, I'm like, yeah, you want to also work with someone. Like if you go see a therapist or a personal trainer, could you imagine changing personal trainers or therapists every 3 months, every 6 months, every 12 months? It's a start over process. And maybe they have different modalities, but when you work with someone for a consistent amount of time, I always say they know your strengths, they know your weaknesses, they know when you're full of it, they know when you're making excuses, they know when you're on the right path and you can like continue to push them. They get to know you, and that's so important. And it's become this thing of I need this now and I'm going to work on this, and then I need this now and I'm going to work on this. And we've done it.
Yeah.
And we got
I've done
some
it.
horrible advice from a coach. We started off kind of like being able to do a bunch of stuff. Over the past year, we've probably turned away multiple seven figures or at least of revenue because we're like, we're going to stay in this lane and only do this. And people will come to us and be like, nope, nope, I'm working with this coach on this. And it's like, well, dang, like that was, and I jumped into that from, and I'm not really speaking specifically right now, but I think you can understand. Can you speak to that at all?
Yeah, and it comes right back to the same thing. Like, are you able to sustain the last thing you did while you jump into the new thing, right? That's the question you always ask yourself. So I think it's extremely useful to learn new skills, to get coaches, to get different perspectives. But you probably know this at some point in your journey, you kind of just are like, I know everything I kind of need to know to at least sustain this thing. A lot of the other stuff just becomes reminding yourself what you need to keep doing. It's like we've heard this a billion times, right? It's like, how do I not blow myself up? I love one of my favorite coaching questions in the world, and um, I think it was Dan Nicholson that like ended up rephrasing this in a fun way. But it was like, hey, when you get everything you want and need in your life, how are you most likely to blow yourself up?
Which we do.
Yeah.
People tend to set off these detonators
Yep.
right when they get like the vehicle on the track. We
Yeah.
have this
Yep.
self-destructive pattern. I mean, this is such an
One of my
interesting
favorite
topic.
analogy, one of my favorite analogies, it was Randy Massengale. He's a teacher in a class I'm taking. I really enjoy. He said he calls it altitude sickness. So pretty much you get too high too fast. What do you feel? Extremely uncomfortable, extremely uncertain because it's fear of the unknown. And what do we tend to do? We want to bring ourselves back down to where we're comfortable. But we missed the entire hockey stick because it was like maybe just starting to go, and it's a human thing because it's a comfort thing, right? It's scary. Even if something is perceived as like good, it's terrifying to a lot of people because it's unknown.
Well, the mind
Um,
and the body are designed to keep us safe. And
yep,
I mean, this is going to go into the whole psychology of it all. But your best thinking, my best thinking, got me to where I am. And
yep,
this is an interesting thing that I'm sure you deal with when you're talking to new potential clients and those of us that are wanting to possibly work with you when you're doing a sales call. And it's like,
yep,
and this is true for me, this is true for you, but you've gotten to where you are. And if you want something more, how do you think you're going to get there on your own if your mind and have created this construct of this box?
yep.
And once you step outside of that box, if you don't have the support, if you don't have the other things, you're just going to fall back into it.
Yeah. Yep. A lot of people, I think, build confidence with certain structures, right? And certain knowns in their head. But we forget oftentimes, especially as adults, that we need to be curious children and we need to play and pretend and imagine. And I think what I see happening so much is people get attached to their current vehicle and it becomes very dogmatic. And then it becomes right or wrong, good or bad, if I do it this way, instead of saying, wait, 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 why did I become an entrepreneur? Didn't I do it to like break all these stigmas? Didn't I do it to not conform to these things? But now I just pick something else to conform to. Um, so it's like I heard this the other day. I really liked it. It's something along the lines of, let's see if I butchered it or not, but it wasn't about being like the same or being different because a lot of times people say, "Oh, I'm being different than everyone," and that's the thing. But being different than everyone isn't the same as being authentically you. And I thought that was really fascinating.
I think everybody being authentically themselves automatically makes you different because there is nobody like you. I think we
Yep.
can look to people for guidance and get the coaching that you need, but also to understand. And I'm sure you work with your clients this way. When we work with a client, there is, or let me rephrase it this way. Many coaching programs out there are this worked for me, so I have this coaching program and it's in this box. And it has to stay in this box, and this is how it works. And so that's why there's a lot of churn, failure, it doesn't work, bad mouthing the coaching industry because people come in and they go, well, I don't fit in this box and I thought this is what I need and it doesn't work for me. So, whereas for us, when you come to work with us, there's a fence, a boundary, or whatever, but it's like a dotted line where it's like you kind of fit into this area, But no two client journey is the same with us because we serve you for what you need, not what we think you need, not what worked for us. Do you find that a lot too?
Yeah, I think where the issue I see coming that comes from business owners is like how knowing themselves. Like, how do you like to show up? How does your team like to show up? Um, because what can happen is we think I have to scale or I have to grow or I have to, people will throw out whatever revenue numbers they're going to hit for the year, and I'm like, cool. Like, why? How does that change what you're doing? Like, what matters most to you? Some people want impact. Some people want to take home more money. They want relationships. There's all these different reasons, right? And I think when you can get to the core of that, you can then just ask somebody, like, what's the most efficient path forward? And sometimes the most efficient path forward for somebody isn't adding anything. Oftentimes it's removing things. And that's what's really challenging for a lot of business owners because we like new stuff. We get bored. I get bored. I guess I'm speaking
We
for
all get
everybody,
bored.
but
We want to try
we all get
different
bored.
things. Yeah.
Um, so yeah, so I see it a lot where business owners really, really, really struggle with how do I have this thing be consistent and reliable, and how do I carve out time, whether it be hobbies, whether it be everything else, for playtime, for exploration. How do I figure that all out and have that work together? So um, when we go into team optimizer and leadership and everything, that's kind of where that ties in, where you're going to have bigger questions like, what's the point of the business, right?
That I'm so glad you said that because I think this is a great segue into kind of what we titled this to. And I'd like to jump into that because one of the things that how we met was finding a space that really tied it to your business being able to function in a way that you could serve the clients you want, but having your reserves work for you in a way that you're not tied to the income. And that's sort of very general. When we're going to talk about the DeFi and crypto space, let me preface this with do your own research. Ian is super hands-on and very well versed. This is going to be our opinions. We can speak, maybe we'll speak of specifics. But I'd love for you to kind of talk about and dive into this aspect of it, kind of what you found, how it differs from the current construct or mindset around all of things in terms of financial investing, all of that.
Yep.
I've kind of left it kind of a blank canvas
Wide
for
open.
you.
Wide
I'm
open.
actually, as you're starting this, many of you know, if you haven't, and I'm surprised you haven't even said anything, Ian, I've had, these are just two, but I've had 3 cups of coffee since we've started. So I want you to dive in. I'm going to jump up and listen as I run to the little boys' room, but kind of open it up as to, kind of why we decided to connect and why it's so powerful and how this can be so supporting and freeing at the same time. Ready,
Yep.
go.
Got it. Awesome. So essentially, one of the coolest things when you remove the boundaries or the vehicle of saying the only way I can make money or profit with this business is I have to get more clients, or I have to create a course, or I have to create some sort of content, we're kind of limiting ourselves, right? And it took me so long to realize this because a lot of business owners, a lot of the businesses we work with have a certain amount of reserves. And all I mean by that is they keep, let's say their expenses are 50K a month. They might keep 3 to 6 or 6 to 12 months of reserves in a savings account that's making like 0.1%. So what happens there is they're just sitting on a bunch of cash, which I think is very smart to have in any business because you want to have reserves for those low months or those quarters or something can happen. But what we found was, well, wait, how much of that do we really need based on our history in cash that's available? And that's just investable capital. That's just money that we could put to work. So I started experimenting with this, and I've invested in plenty of things in my life, but primarily with the business treasury in the last year. And of course, you and I both started playing in the DeFi and crypto space. So, like you said, do your own research. This is not financial advice. I did stay at a Holiday Inn Express one time, so I know my stuff. But I think it's just taking your reserves and thinking, cool, I'm comfortable as long as I have this accessible and in cash. And there's some ways in DeFi, which is really cool, that you can pull the money out fairly quickly. Depending on your state or your country or whatever, you got to know your rules and all that. But like for me, I can get access to the cash I have in there in like either same day or within 2 to 3 days, depending on my bank wire. So it's remembering taking these reserves, this money, these resources you already have, and you can do fairly well with that. So even if it's 5% or 10% or 20% or 30% a year, if you got $100,000 sitting in an account somewhere, it's like you didn't have to do anything. It was very low effort once you learn the basic protocols and you learn security and stuff. Um, Risk, if you know how to invest or you know about yourself and how you tend to make decisions, and then optionality. So what I love about it is you want to come at it from low risk, low effort, high optionality. What is it when you're getting clients? Well, it's a fair amount of effort, right, to get new clients, to keep those clients. The risk is, well, I could lose those clients, right? They could go away. And then the optionality there is like, well, I can make all these offers and do all these things, but it takes a ton of time and energy. What's cool with reserves and investing is once you learn the information, you know how to assess risk, or you talk to somebody who already knows it, you can then just push buttons on the internet and walk away. We talked about this. And if you know how to track it and pay attention to it, I'll just give you a simple example for us. So, um, in the month, and March was a phenomenal month, I know, for all of us because we guarded our guard. That's inside things. But my take home was 3 times the revenue with the business, purely just because of our reserves. And that's absurd, right? That makes no sense to a lot of people where you say, wait, say we make 60K a month. That means
In the
the take home was
business.
108. Yeah, yeah. And I'll just use random numbers, but I'll give
Yeah.
you like, so what tends to happen is if you're, even if you're starting small and doing dollar cost averaging, which just means investing a little a day, or starting with a small chunk, it's just money that's sitting there doing nothing. And as long as you're not going to need it like the next day, um, there's plenty of places in DeFi, just like there are in certain traditional investing, where it's fairly safe. You can insure it in certain places. You have like Anchor Protocol, you can insure it, stuff like that. So there's all these different levels of risk, just like in anything else.
Let me jump in real quick because I get what you're saying. But let's assume someone here is new to this space because you're speaking at a relatively high level. New to
Yeah, yeah.
DeFi. DeFi just means basically like decentralized finance. Like it's not bank run and bank owned. And
Yes.
and so I'd love for you to be a little bit more specific about things so people can understand. So
Yep.
we know the
Yep.
typical banks give you no money on your money, and when you put money in the account, they can take out, I think it's like 10 or 100 times the amount, and they can leverage it. So they're using your money to make lots of money. So they're
Yep.
like, hey, put 5 grand in, put 50 grand in, because I get 500,000, 5 million that I can play with. Um, and reserves. Like, I know what reserves are, but like reserves could be in your business, or if you're just working a job and you're like, I want my money to work
Yeah.
for me. It could be the money
Yes.
you're like, I'm going to put towards savings. Um,
Yes.
let's actually, if it's cool, I'll let you dive back in, but like, let's talk specifics about kind of what we found. We'll share a little bit about like solvable problem, base
Yes.
case, because, and I'll preface this with, you're helping people get this set up, right? I
Yep.
have some of mine set up, and we
Yep.
know that, but you're helping people get this set up, and how once you know your solvable problem, what you need to put in, how you get in, why it's safe, all of those aspects. Because people are like, crypto is so volatile. Well, if they don't
Yeah.
know it's a stable coin and it's paired
Yep.
with something, so I've kind of now set the stage again.
Yep. So I'll say the simplest thing that anyone who comes to work with us, it's the same concept. And like you said, yeah, we have the offer for reserves because we started just doing it for our clients, and everyone's getting great results. So we were like, well, let's do it for, friends, family, things like that. And then of course people started reaching out because who doesn't want to make money on money sitting there? But I think it's this. It's with this and with anything new, and we talk about the certainty app, you and I, a bunch. I always have them go through this exercise before we even talk about any crypto or anything. It's, what are your actual numbers? Like most people have a retirement number, and you talked about it before. They have a reserve number, and I'd like you guys to think of reserves and emergency funds as the same thing. Everyone is different with the amount that they feel comfortable with having in case of some sort of emergency. That's what a reserve is, really. You're just saying, if something doesn't go as planned, I have accessible cash or capital that I can have, so I'm not like going into massive debt, or my business isn't going under, or I'm personally not like defaulting on my bills. That's pretty much it. Um, so that's usually one of the first things people like to have shored up. I've found when I do the work with people is they like to have these couple things. Here's my emergency fund. I want it to be this much, and I want to get it by this date. I'm like, cool, sounds good. So we put that in there. Uh, Oftentimes, business or business owners have either business or personal debt. So they say, I have this much debt. I'd like to pay it off by this date. It's this much. And then the third one is we talked about before, it's retirement. So we call it core capital, but it's pretty much like, how much money do you need so that even in a very conservative investment, the returns of that money would just pay for your life for the rest of your life. That's how I look at it, to keep it really simple. So those are the three kind of core things most humans need before you go into any of this stuff. You need to know these things because crypto might be an excellent vehicle for you. It might not. So I had a client the other day. They needed 6.9% per year to hit all their goals in life. Do they need crypto? No, you can get that from like some really safe traditional investing. So, and you don't have to learn a bunch of new things. You can just, go do that. But you can play around and say, well, would you like to get that sooner? Did you want to? We hear it as collapsed time in our ecosystem, but it's really like, hey, that's in 7 years. What would 6 years look like? Does that matter to you? And some people say, no, I don't really care. And other people are like, yeah, I'd love to like cut my retirement in half the amount of time. So we'll talk through those things. So to kind of recap, you need to know these things about yourself. How much do you actually need to fill these buckets, and when do you want them by? So if you know those things, then all we do is we take your current situation. We say, hey, listen, you have this in your 401k, it makes 8% per year. You have this in your uh, savings account, it makes 0.1% a year. You have this in your index funds, it makes 10% per year on average. And you just weigh it all out. And it's super simple because before I even get into the crypto talk with people, it's kind of like, are you on track? If you're on track, we're good. Just don't blow yourself up, right? It's like you can get there quicker if you want to play some stuff, but we just keep it simple. Now, with the crypto talk, it's usually a vehicle to collapse time for most people. In other words, for me, I was going to hit my retirement in 10 and 12 years. I'm on track to hit it in the next year or two. But it's like, I didn't even know that was an option because as entrepreneurs, we usually reinvest into our business because it's the best return for most of us. But once you realize that you can invest in something that requires way less effort, if you just learn, some of the basics. And let's get into that right now. Like super, super simple. How do I get money in? How do I get money out safely? The like top two things. So how do I get money in, hold money in there, and then get it out safely in the most secure way possible? If you can know those things, you then can make better long-term decisions because now it's similar to like sending a bank wire, or it's similar to writing a check. It doesn't feel as crazy to people. So that's number one. I always go through like, because we always can say do your own research, but for me, is this person capable of learning how to put money in, how to like hold it safely, and how to get money out? That takes away 90% of people's like fears.
Let me ask you a
So
question then, because a lot of people they know about the crypto space or even are in it, but it is volatile. It
yes.
is scary to some. Like, how do you show that this is viable? It is like because you hear crazy returns. You hear
Yep.
50%, 80%, 250%. You know, can you explain how that's possible? And
Yeah. So the first thing is you teach people how to make good decisions. That's the ideal thing. If we can teach people how to understand themselves and understand what they actually want, because the biggest variable, the biggest risk in crypto is humans doing like it's people, just being people. And I think what most people don't realize about crypto is there are tons of different vehicles within it. Like a lot of people are just going to see Bitcoin or something like that, and they're going to look and be like, "That's like I would throw up every other day if I had to look at that chart because oh, it just got cut in by 10%, then it went up like 30." Like that. That's very very scary to a lot of people. What a lot of people don't realize is there's similar versions with like one click from a phone app to a savings account in crypto that you can make like 19 to 20% on, and you can insure it for 2 to 3%. So you're making like 15 to 17% depending on, what your things are, and it's in stable coin pegged to the US dollar. So, and all that means it's one for one. People put $1 in, they get this dollar coin back. So I don't think the average human like knows that these opportunities are there because they're still not super obvious. Um, People are still getting used to Bitcoin because Bitcoin's been around for like I think 11, 12 years now. And that's the one that's more mainstream. And I totally understand why. Like I was very similar when I did a deep dive into crypto. I didn't know how many opportunities there were out there. But you put it really well. What crypto does, and I think why a lot of entrepreneurs love it, is we all tend to dislike authority quite a bit. I think so, and regulation, because we like to just think what's the most efficient path that I can help people. Like just let me help people. And what it does is it allows you to be the bank yourself in a lot of sense without a ton of regulation. So there's pros and cons to this. The biggest pro to this is you have massive upside potential if you know how to assess risk properly. If you do not know how to assess risk properly, there's a good chance you'll lose all your money. And I say that only because there's no help desk. You can't The help desk that's going to get back to you is somebody scamming you, which is really interesting in crypto. It's like if you go into a forum or a place and you say, I need help, I want to send this money here, someone's going to go, oh, I'm customer support. Go ahead and just connect to this wallet real quick and we'll get you all sorted.
bada bing,
And
bada boom, and
yeah,
it's
now they
gone.
have your money. So it goes with the radical responsibility piece. You have to study enough and do your research. Now, that being said, a lot of bigger institutions are getting into crypto. So there's going to be these newer things that are a lot safer. They're going to be lower percentage where you can just tap a button from probably like your bank or from an app you signed up for, and you can get 10% or something, which is still incredible. It's incredible to think
And
like
while they're
most
doing
people are
that,
getting 0.1%.
you're getting 10 or 12%. They're using it to make 100%. Because
Bingo. That's the game.
my daughter just woke up, so I'm gonna grab her and bring her in. But let's now
Yeah.
dive into what we're up to and why people listening want to talk to you about this and why you're helping. Like, if I didn't know this and I've got a higher risk tolerance, but like, and I don't know if you want to use maybe some of your clients' examples or personal examples. We can talk about like what's been put in and how it's performing. And you don't need to go into the. We don't need to go. I think into the whole picture of the base case and guard and night, and we're going to confuse the heck out of people. But how it works and how they mitigate the risk and how it's built that way. If you want to start there, I'm going to go grab Brighton. I'll be right there.
Do your thing. Yep. So a thing that we just happen to be heavily invested into is called base case. And base case in financial terms just kind of means the most likely expected trajectory of your investing. In other words, what's most likely to happen. all we're doing is we're pairing a couple different assets, so it's making it easier for people to trade those assets. And I know this might be getting fairly technical, so I'm not going to go crazy into it, but we're trying to just hedge downside risk so that the money is accessible. You could pull it out, you could borrow against it. There's a lending network coming soon. But the whole point of this darn thing is this. There are a countless number of options in crypto and DeFi that you can invest money in and just put it in a place, and the principal can be protected. Aside from things like you getting your wallet hacked or giving somebody your passwords, similar to, and I always say this, it's similar to if you put your credit card out on the internet in a place that wasn't super ideal to do so. Same thing. So it's like keep your passwords protected, we call them seed phrases in the crypto land. But with base case, it's super, super simple. We're essentially protecting things by pairing them with a dollar coin. So another dollar coin, BUSD is what you use, right? We're using all the BUSD. I don't like how what I'm struggling with here is how technical do you want me to get? I think people are going to glaze over if I get too technical.
I don't think we need to go too technical, but I think more along the lines of what, like, for people that are listening that are like, hey, I'm interested in really maximizing some returns, really do it like that, like why this is so good, why since like November, I, I've had I don't even know what the percentage is because it's been crazy, but it's like 1,000%.
Yeah, yep, we've done well over 1,000. It's because of essentially the opportunity of that high upside, right? So we are taking a risk, but the goal with taking that risk and what we're taking it in is, if I'm being honest, it's education of the investors in this particular asset. So it's the education of saying all the stuff we're talking about, you and I, about solvable problem, and saying, do you know what these numbers are that you want in your life? The people who have invested in these particular assets have done this work as well. So it's that simple. If you know that you're on track to get everything you want in life with your current investments, that's fantastic. Like, cool. Just do your best. She's adorable, by the way. So
Thank you.
cute. It's so hard not to just like take in all the cuteness. Um, I love it. Hi. Oh my gosh, amazing, amazing. I miss mine when they were that little. That's a fun age. Hi.
It is. It is.
Anywho, I can't even right now. Adorable. So what we really want to do is be able to assess, you said it well, the risk tolerance of the person. That's the biggest one. Once you know your risk tolerance, you can know, hey, maybe I want to put a little bit of this to start into this thing that's very low risk. And I want to see the return over a little bit of time just to feel a little better about it. And then maybe I'll put a little more in, and I'll put a little more in. And that's how I actually did base case with the ecosystem we're in. Is I think I started with like 10 or 20K, and it was around, it was like early, November or whatever it was, and just kept putting more and more in as it was doing well. And that's with any investment, right? You have to build trust. So it's realizing you're not going to necessarily put $10,000 in and make $1 billion in like 3 months. Like maybe, but that's not why I'm particularly doing it. I'm just saying this is the most efficient vehicle to get me there with the highest upside and lowest downside. And once I look at my investments again in a couple of months, maybe that's still the case. Maybe it's not. But having that decision-making power, to me, is that's why I'm actually helping a lot of people with this, is because I find people go into it trying to like get a lottery ticket instead of saying, hey, I'm good either way. It would be really cool if I could cut my retirement time in half. Like, cool.
Well, and I would
How
also
do we
think to
make
say
sure? Yeah,
most
go ahead.
entrepreneurs, many, don't have a retirement, don't have a
Yes.
401k, don't have anything set aside, and if they have savings, sometimes they have to tap into it. What I love about this is, it's easy, sort not set. There is a set and forget sort of aspect of it, and I don't want that to sound cheesy, like,
Yeah.
because people can go, oh, set it and forget it.
Yeah.
It's definitely something you want to like learn about the people that have created this ecosystem and why they're doing it and how they're involved so that it's, they want it to continue because it helps them. So there's that aspect of it, but also the aspect of knowing, like we could talk about, the solvable problem, how much you need and how many years and what it would take to do that. And it's a realistic formula you can put it in based upon compounding and your return. And
Yep.
creating the new normal of, and I'm just going to throw random numbers out because I don't want people to like go, you're full of it. But let's say it's 20%. Let's say it's a realistic return of 50%. What if it's a realistic return of 200 or 300% in a way? And when that happens, how you're able to utilize it, right?
Yeah. And the other thing there, and it's something that's really, I know, been important to me personally, it's a similar feeling when you have monthly recurring revenue in your business in general. You start to show up differently in your coaching, in your guidance, because you are usually physically, emotionally, and financially secure. So you're good either way. And what I find is you can have high empathy and high accountability with your clients at the same time. And to me, that's personally how I like to serve. And it's like if you don't have that stability and that extra cushion, it's tough, right? As a business owner, if you have a couple tough months and you don't have those reserves or you don't have them invested in getting you another form of income, it can be really, really challenging because,
It's scary.
yeah,
So, I'm trying to think of the next best logical question. So so you've done this for you. I've done it for me. We know a whole bunch of people that have done it, and
yep,
again, do your own research. I'll just keep saying that you have to feel comfortable. Um, Diversify. Have something with a financial planner too. And here's why I think it's interesting. You go to invest with a financial planner, they invested in the stocks, they invested in mutuals. It's kind of like the same. It's a very similar thing, but you can also put it in something high risk, and all of a sudden it craps the bed and it's gone too. And you have to
yep.
trust the person you're giving your money to, right?
Well,
All
look
across
at
the
look at
board
the
in
market
whatever
right
it
now.
is.
Like a ton of people have lost a ton of money in their 401s in the last, because the dips in the stock market.
Oh
So
yeah, or what the company
this
decides
is
to
all
do with
risk.
the 401k money or all of that stuff.
Yeah.
So first, let's preface it with you're not actually investing their money and making the choices. It's a very simple ecosystem. There's a few different options, but it's all about protecting you and growing at a faster rate if you want to move faster. Um, it's so challenging not to go technical and deep and like have that glaze.
Here might be. I'm trying to think of a simple
Oh, I got
story
it.
or
I
analogy.
got it. What would you recommend? You've kind of said it. What would you recommend someone's first step in doing this? Um, let's say they've already talked to you and they know they want to move forward. And that, would you say, hey, put a grand in and see, put the farm in and see? I mean, you've kind of touched on this, and
It's funny with me, man, because I'm a stickler on this. I have them do the certainty app.
yeah, okay. So
I
it's
made a walkthrough and I just have them do
app.certainty.finance,
it.
right? So I highly
Yeah.
recommend go to app.certainty.finance. Also, Ian, you're going to be more than happy to talk to people if they're looking to actually grow their business reserves or have savings that
Yeah.
at a certain, and obviously it comes at a hiring you. Um,
Yeah, because they have to compile this information, or else it's kind of like it'd be almost irresponsible for me to say, "Hey, go put 5K and see what happens," or go put 10K, because I don't know the position they're in. I don't know what they're investing in. I don't know any of that stuff. So if they can do that, um, after that, then we kind of play the whole cool. Here's some things you can do to go get comfortable with this particular vehicle if you want to invest in it. So they learn how to get money in, get money out, things like that. But before that, let's find out if this is even needed. You might be on track and like keep living your best life, keep working with your financial planner. And the other thing about financial planners that drives me nuts is, have you ever gotten this? It's like hey, I'm going to ask you a bunch of random questions that aren't really pertaining to what you want, and then I'm going to sell you whole life insurance or something. That's my
Yeah,
favorite.
it's yeah.
Like,
I mean, that's a whole nother conversation about a whole bunch of other stuff. Um,
anywho,
so I'll speak to myself, which I think is an interesting thing, and if you want to you.
yep,
So I have my solvable. Sasha and I have our solvable problem,
yep,
and it was a big solvable problem.
yep,
How do we get 10 million in 10 years, right?
yep,
And you use the certainty app, and I have this. I think from one of the guys in Wolf Den, I have like the Excel sheet, which is the same thing. It doesn't take into consideration it's taxes and all that. It's just very simple. But
yeah,
you put in the
yep,
numbers of how much you want to put in, how much you're putting in, or if you're putting in anything in additionally monthly, and the percentage that it's yielding. And then you can figure out how long it's going to take you to hit that. And what I found is interesting, based upon what I have in there right now, I'm going to hit that way soon. I don't have to put another dime in. And it blew me away because when I put it in November, it said X amount of time. Now, this is also based upon values going up. So it's like the math you're doing is based upon when you put it in at what everything is at that current rate. So if you're getting in and it's 1 for 1, right? That's how long it's going to take. Well, what if it becomes 5 to 1? Well, you've exponentially compressed that time and consolidated that time.
yep,
And so it's so powerful because when you look at it that way, when you look at it, could things change? Yes. Could it all go down the tube? Yes. Do I believe that the people that have put this together are also going to protect their investments? Because they've got stuff that if it starts to go sideways, they're going to create something else that protects them, which then protects all of us.
yep,
Um, I've now set myself up. Well, if I just don't even look at that anymore, if I can just not, right? In 10 years, I'll be 58. I'm pretty good, right? One of our goals is like creating legacy wealth for our kids and having it so that they can do what they want, be educated, and serve society without this fear because we know money becomes the biggest stressor. Um,
yeah.
so, what's important to you? Are you in your 20s and you're like, I can wait 20 years? And and I, because they always say, you hear this, Tony Robbins talks about, all of them talk about compound interest. If I had started when I was 18 putting $100 a month away, I'd be done working. And that's in
Well,
traditional
yeah.
investing.
Well, that's the fun thing to even talk about. I'm not going to get into like, I'm not going to like coach people on parenting or anything, but
But
like
please,
this is cool. So with the kiddos,
speaking of which, keep
um,
talking. Mine just ran off.
amazing. So I have 5 and 8-year-old boys, and the oldest now is he's asking me about business, about investing, about this stuff because I do it and I talk about it. So he's the classic like, hey dad, like how can I make more? Like, can I get an allowance and can I make more money with chores and doing those things? And we're already talking about and teaching like how could you provide value for others? How could you find ways to help other people? Um, and then we joke about, of course, like what's the money for? And for our kids, it's so they can go to like, so our kids can go to like Five Below or like get a toy or something. They're still little, but it's teaching them the concepts of like how do you make decent decisions around money. Like kids can learn that at a pretty young age. And what's so cool is my grandmother did this when we were little for all of her grandchildren. She put like $500 in a mutual fund when we were all born, and then she slowly just added whatever like $50 a month. It was a substantial chunk by the time she had like two rules. It was something like I don't want you to like don't smoke by the time you're 18, and there was some other rule. It was really funny. And then when we were 18, she said you can leave it in there or you can take it out and like use it for whatever you want in life, right? So now you have another decision to make. So your kids can make these decisions on, well, am I going to learn how to be a good steward of this capital and like manage this capital and all that? Oh my God, it's amazing. You're so adorable. Um, or, as we've seen with lottery and stuff, if you give a kid or you give a if you give a 20 something year old like a couple $1 million, do you think that's going to turn out well, right?
Right.
Because we can have generational wealth and just give it to our kids. But for me, it's like, hmm, I'm already trying to think about education into how do we teach the younger generation how to get involved in this stuff and understand themselves better and understand how to invest their time, energy, attention, and money better. And man, what's their world going to look like in the next 10 or 20 years?
Oh yeah, and it's just the
Crazy.
stewardship and all of that is really, really fantastic. And this goes into the next conversation, which is another rabbit hole that like traditional capitalist society and our government doesn't want everybody to have this information. They don't want to level the playing field. They don't want to create new wealth in people because they want to, in my opinion, there's a want to need to control.
Yeah, there's an interesting concept. And do you know the whole like accredited investor requirements and everything? So you can get access to higher risk traditional investments if you're an accredited investor. Typically, you need to either have, I think it's 1.1 million, I can't remember how much net worth, not including your primary residence, or you have to make, I think it's like 3 or 400K consistently a year, or you have to uh, have someone who's either in a family office or like a sponsored financial person. So people who are of a certain wealth already have access to certain things that are like this. What crypto does that I love is it gives access to everyone. But that's with a big caveat of you got to do research and
And you got to learn how
understand
to
risk.
get involved and all the things, setting up a wallet and
Yep.
how do I buy and how do I like exchange it for this and even today sometimes like I have to do some stuff and it's like not just today but I mean even stuff like in today I've done many transactions, right? Sometimes
Yep.
I'm still nervous to hit the button because you're like, what
Yeah.
if I mess it up? It's literally gone, you know?
Yeah. And that's it's funny too because it gets so gamified, right? Especially online, like it gets very gamified where I still have to remind myself, hey, before you send this like 50 or 100K over, like send like a grand just to make sure it's like before you make the big transfer, like send a little chunk to make sure it gets where it has to go,
Yeah.
and then make the other one. Oh, you paid an extra $10 fee or something. Who cares? I'd rather pay a $10 fee than lose like $100,000 in a transfer.
Or I sent it, it hasn't shown up yet,
Yeah.
What? And you're like, where is it? And then like
Yep.
the network's slow and then the next day it shows up. Or hours later and you're kidding customer support going, I sent this and
So it comes back to the same thing. Do you have the um, ability to have that patience or to not make a reactive decision if something doesn't go as planned? And I mean, that's investing 101, right? It's like, how do
Yes.
I take the emotional reaction out of this
I think
and
that's the
and
most
make a
important thing
logical
when it comes down
decision?
to is removing emotion. And we are
Yep.
emotional people, especially when it comes to money. Um,
Yep.
okay, this has been great. I don't want to cut it off. I could keep talking to you about this for ages, but I also want to respect your time. So first and foremost, thank you for spending this time. This was just awesome getting a chance to chat more and share this with everybody. And I know we didn't like specifically talk about what it's called and what it is, and I know we had a reason for not doing that, and it also goes down a rabbit hole. But I will say this. Ian and his team, Ben and Jay, are phenomenal. If you are looking for the backside of retention and revenue, raving fan, definitely reach out to them. They're probably not taking clients anyway because they don't need it, but they're awesome.
We're taking for May. We've got a spot or two for May. We're taking, but I love that you said backside. Ben's definitely going to watch this and be like, "We'll improve your backside."
I like that. Did I say backside? I love
You
it.
did, and
Yes, everybody can
it
use
was
a nicer.
amazing.
Ben's working out a lot, so he could definitely he's
He
working on
is.
his backside.
He's looking good, dude. Have you seen him recently?
I haven't, but I'll ask him to send
Okay.
pics.
Yeah. Thanks.
But secondly, if this base case, if this solvable problem is something that is of interest to you, you're welcome to ask questions. You're welcome to ping me. But Ian is definitely welcoming the conversation. And if it's something that looks good, he will help you get it all set up. Ethicalscaling.com. You can message him. He's probably going to be tagged in here on all the socials. And if when this is in podcast form out there, we'll have contact information as well. Ian is I fully trust him and what he's doing. They have been so kind and generous in just of like sharing knowledge in the little time I've known him. I challenge and recommend you to stop using your conventional thinking and the box thinking to know that there's more out there for you. It's been fantastic for us. I'm not attached to whether you do it or not. I wanted to provide this information to you, all of it, so that you can make the best decision for you, your family, and your business. So if you don't have a business you're running, you can literally use your personal money to grow your, like you can be your retirement fund. It can be a way for you to create a monthly paycheck as well. And Ian will go into all of that. So thank you again, Ian. Is there anything that you want to say as kind of a final to do before we rock out of here?
To do, wow. I don't know, probably just live your best life. Hope you had an amazing holiday with your families this weekend and have an awesome week. But honestly, if you want to get a hold of me, find me on the Facebook or leave a comment and we'll help you out. But yeah, just looking forward to helping if anyone needs it. That's all I got.
I love it, man. Thank you. And could this guy be any more chill? Opposed to like he is the yin to my yang. All right, all. We'll see you again soon. Thank you so much, and have a